Good morning, everyone. Today we are going to discuss about the Bretton Woods system. So we are going to cover the following learning objectives, explain the origins and development and purpose of Bretton Woods system. We discussed it a little bit in our previous session when we covered the economic globalization. And we are going to evaluate the role of International Monetary Fund. We're going to evaluate the role of World Bank and the World Trade Organizations are as parts of the Bretton Woods system. So basically, as we said in our previous session, globalization leads to rapid changes in economic environment. Capital movement becomes larger and less controllable. These conditions require a need of stabilizing system. And when we covered the neoliberalism in Module D, we discussed about the idea of institutionalism or creating institutions who would stabilize the system. Well, part of this system is the Bretton Woods system, and this system was established in 1944 at Bretton Woods. So in 1944, John Keynes emphasized the importance of rule-based regimes to stabilize business expectations, something that was accepted in Bretton Woods, and one of the decisions was a system of fixed exchange rates. This concept is viewed as a potential solution to challenges that occur because of the growing size of international trade and capital flow. And this concept actually was established first and foremost to avoid any type of military alliances and to avoid a new conflict based on conflicts over the resources. Okay, so a little bit about the Conference of Bretton Woods. It took place in 1944, Bretton Woods, USA. 44 countries participated at that point to the conference, and the main idea was to restructure international finance and currency relationship. The participants decided on creation of two financial institutions, International Monetary Fund and International Bank for Reconstruction and Development, which later on became World Bank. Okay. Additionally, a system of fixed exchange rates was implemented with the US dollar as a key currency. Now, so we discussed we gave an outline in the previous slide. Bretton Woods Conference established three structures which would basically control the capital flows and the trade. So International Monetary Fund was responsible for financial stability and mainly exchange rate stability. World Bank Group was responsible for economic development, and at first it was actually developed to support European states after the World War II. Later on, it actually extended their roles. Okay, so basically, the World Bank Group was established for development loans and technical assistance. General Agreement of Tariffs and Trade, or GATS, later on was established as well in more or less in the same time frame. It was actually established for to control the trade, right? And in 1995, it became World Trade Organization. So, of course, while establishing this system, the major actors actually had to discuss different scenarios, right? So at that point, for Bretton Woods system, there were two important economists who actually who gave ideas of how exactly the system should work like. Okay. So basically, Harry Dexter White was a US economist, John Keynes was a British economist. So Harry Dexter White had the idea to establish a bank for reconstruction, which today is the World Bank, and International Stabilization Fund should to be established. He saw the imbalance as a problem only of the deficit country. U.S. defined that he actually was supporting the idea that U.S. had to define the value of its dollar in terms of gold, so that 1 ounce of gold would be equal to $35. All the members had to define the value of their money according to what was called a par value system in terms of US dollar as a gold. His idea was pretty much expected. He was trying to support US interests and ensure that US had enough power in terms of its economic stability. On the other hand, John Keynes had the same concept, but his opinion was that was to vest International Monetary Fund with possibilities to create money. A fact that is easily understood in that Great Britain was suffering from deflation policies during the interwar period. International Monetary Fund will have the authority to act on a large scale. In case of balance of payments imbalances, John Keynes recommended that both sides, debtors and creditors, should change their policies. Countries with payment surpluses should increase their imports from the deficit countries and thereby create a foreign trade equilibrium. So basically, if we are going to compare Harry Dexter White to John Keynes, Keynes actually had a broader perspective, and which would actually cover more issues that would occur within the economic structures. So, of course, we could say that the Bretton Woods system was an institution established according and following more of U.S. interests. So U.S. has been and still is a dominating power in Bretton Woods system. That explains a lot its behavior in economic areas. After World War II, was a country with the biggest economic potential. US dollar was the currency with the most purchasing power, and it was the currency that was backed by gold. If we remember, in our previous lesson, we discussed the fact that US was purchasing gold from most of the countries which faced the World War II, were involved in World War II, and this is why by the end of World War II, actually, US had most of the reserves of gold in their country. Okay, therefore, US was strongly appreciated. Let's say most of the European states had debts to US. And U.S. was strongly appreciated and became the currency. The U.S. dollars became a currency of Bretton Woods system. The headquarters of two main financial institutions, International Monetary Fund and World Bank, are situated in the U.S. Similar to the United Nations, we can see that two of the main financial institutions are actually based in one of the most powerful countries in the world. Okay. The dominant role of USA became apparent when the American ideas about Bretton Woods system gained more acceptance than those of Great Britain. So we discussed about these ideas before. We discussed about Harry Dexter White's idea and the Keynes idea. Now, we're going to discuss one by one about International Monetary Fund, World Bank, and the World Trade Organization. So, International Monetary Fund was established on 27th of December 1945. This agreement was signed by 29 countries at the Conference of Bretton Woods. It started its operations on March 1st, 1947, and it's currently consisting of 183 countries. So basically, all the countries, or most of the countries, are part of United Nations are part of International Monetary Fund as well. The main purpose of International Monetary Fund is to promote international monetary cooperation by establishing a global monetary agency that would supervise, consult, and collaborate on monetary problems. It facilitates the world trade expansion and thereby contributes to promotion and maintenance of high levels of employment and real income. International Monetary Fund also ensures the exchange rate stability, and we discussed that in our previous lesson, so if you didn't watch the previous lesson, you have to watch it now, to avoid competitive exchange depreciation. It eliminates foreign exchange restrictions and assists in creating systems of payment for multilateral trade. And also, members that have issues with their balance of payments are provided with opportunity to correct their problems by making the resources of International Monetary Fund available for them. In other words, they're able to apply for loans. Now, in order to join International Monetary Fund, countries might have to contribute to a certain sum of money. Okay, this would be a quota subscription that represents a sort of credit deposit. This quota represents the largest source of money in International Monetary Fund disposal, and these are used to grant loans to member countries with financial difficulties. Each nation that have joined the system can immediately withdraw 25% of quota and request more if the sum is not sufficient. The debts have to be paid back as soon as possible, and they have quite a high percentage of payment back. The country has to demonstrate how the payment difficulties will be solved in order to get the loan, and the biggest country's contribution is the higher is the sum of money it can borrow from US. So basically, the more money you contribute International Monetary Fund as a country, the more money you can actually borrow. So the money International Monetary Fund lends should not be compared to a loan of conventional credit institution. For a country that files an application, it is rather an opportunity to buy a foreign currency and pay with gold or national currency. Okay. So a little bit about the structure, right? You can see that International Monetary Fund is has the Board of Governors, which works closely with Executive Board. It has a Managing Director, okay, which selects, reviews, and like the Executive Board selects, oversees, and reviews the decisions of Managing Director. The staff informs and advises, creates reports, right? Then they have country authorities, which basically would update the International Monetary Fund structures about the situation. They would also appoint people to Executive Board. You can see that there are strong relations with G7, G20, and G24, okay, which are working as advisors both for Managing Director and Board of Governors. Okay, and that's pretty much it. Okay, so another structure of Bretton Woods system is the World Bank. The main goals of the World Bank is the World Bank is the world's most important source of financial aid for developing countries. It provides around 16 billion in loans annually to its client countries. It uses its financial resources, highly trained staff, and extensive knowledge base to help each developing country to have a sustainable development and sustainable growth, and to fight against the poverty. The goals are to improve living standards and eliminate the worst forms of poverty. It also supports the restructuring process of economies and provides capital to productive investment. World Bank actually aims to keep payments in developing countries balanced and fosters international trade. It is active in more than 100 developing countries. The forms of assistance of World Bank would actually involve the government agencies non-governmental institutions, and private enterprises. So when you're going to discuss, if you want to discuss about the World Bank, you have to understand the main difference between the International Monetary Fund and the World Bank is the World Bank is directed mostly to the developing and underdeveloped world, and it mainly deals with the situations of poverty. Okay. The forms of assistance would be in the form of financial service, analytical support, advisory support, and capacity building. The World Bank is an independent organization of United Nations. However, it is considered an agency of United Nations and works in a very close proximity to the United Nations. Each country that wants to join has to be a member of International Monetary Fund compulsory. So basically, any country which would like to help to have support from World Bank, especially developing countries, first have to be part of International Monetary Fund, pay their 25% for the loans, and this is when they would be eligible for any type of support from World Bank. The executive board consists of 5 directors, to whom a council of governors transfers responsibility for nearly all issues. The president of World Bank is de facto elected by the US government and then confirmed by the executive board. So when you're going to, next time when you're going to ask yourself why exactly US has so much power in the world, you have to understand, or you have to link it with the idea that most of the financial institutions in the world are actually controlled by US. Okay. So if we're talking about the certain adjustments World Bank had to the changing environment, after the establishment of Bretton Woods system, the World Bank was oriented towards the problem of decolonization. So basically, this is where they were involved for. Straight after the World War II, World Bank was mainly directed to the support of the European countries which suffered from the World War II. So basically, after the 1990s, or let's say in during the Cold War, World Bank was mainly directed to help the colonial countries, the countries which would the colonial countries. After 1990s, its help shifted to the post-Soviet states as a matter of support. So basically in 60s and 70s, during the imbalance of payments between the Western industrialized countries, which would actually affect badly the Bretton Woods system, one substantial problem was that US dollar had to be an international reserve currency at the same time. This made national monetary and fiscal policy of US free from extent of economic pressures. In the 60s, they ran in an inflationary policy and limited convertibility of US dollars because the reserves were inefficient to meet the expectations. In the 70s, the countries agreed on permitting different kinds of ways to determine the exchange value of nations' money. The National Monetary Fund required that the countries no longer based this value on gold, and it was basically this is how the currency of the based on the dollarization system. Basically, this is how the currency, the value of the national currency would be established. Now, the third structure of the Bretton Woods system, directly or indirectly, was the World Trade Organization. First and foremost, the World Trade Organization did not have the similar name when the Bretton Woods system was established. At the point of its establishment, of the World Trade Organization, the countries thought of creating a general agreement of tariff and trade, and as part of the as a regulatory body of the trade relations between the countries. And the World Trade Organization actually appeared as an institution in 1995. So, why exactly did the country think of creating a body that would regulate the trade? Okay, so during the Great Depression in the 30s, the international trade was badly affected, and various countries imposed import restrictions to support their own economies. This actually resulted in a sharp decline of world trade. In 1945, USA put forward many proposals to extend international trade and employment. And finally, on October 30, 1947, 23 countries at Geneva signed agreement related to tariffs imposed on trade. Okay, so this organization was, or the short name of this agreement was GATT. Okay, so those 23 countries, or let's say the main principles was the non-discrimination, which meant that the contracting parties' trade policies should treat all GATT members equally. No member country shall discriminate between the other members of GATT. Members of GATT agreed to apply the principle of most favored nations to all import and export goods. And national treatment, foreign goods, services, or investment are to be treated not less favorably within the nation's domestic markets than competing products or services produced locally. Between 1947 and the last year of GATT, there were 8 rounds of negotiations between the participating countries. The first 6 rounds were related to curtailing tariff rates. 7th round included the non-tariff obstacles. So the 8th round was entirely different from the previous rounds because it included a number of new subjects for consideration. This 8th round was known as Uruguay round. The discussion at this round only gave birth to World Trade Organization. So what is the difference between the GATT and the WTO? WTO was, let's say, started to work as an international organization regulating trade on January 1st, 1995, whereby GATT actually was created in 1947, as we said. GATT was ad hoc and provisional. It had contracting parties, whereby WTO it's an agreement, and its agreements are permanent. So once you sign the agreement, you cannot go back. WTO has members. So basically, in case of GATT, you can just simply cancel the contract and you don't have to follow the rules. GATT system allowed existing domestic legislation to continue even if it violated a GATT agreement, whereby the WTO does not permit this. Once you sign the agreement, you have to follow all the points of it. GATT system was less powerful. Dispute settlement system was slow and less efficient. Its ruling could easily blocked. WTO is more powerful than GATT. Dispute settlements mechanism is faster and more efficient. Very difficult to block the rulings. So WTO deals with rules of trade between nations. Its main function is to ensure that trade flows as smoothly, predictably, and freely as possible. WTO is an organization that aims to liberalize trade, a forum for governments to negotiate trade agreements, and a place for them to settle trade disputes. At the core of the system, known as the multilateral trading system, are WTO's agreements negotiated and signed by a large majority of parliaments of the nations and their parliaments. So WTO has a larger membership than GATT, with the number of being 153. India is one of the founder members of GATT. Okay. WTO is based in Geneva, Switzerland, compared to International Monetary Fund and World Bank, which are both established in US. Administering the multilateral trade agreements, which together make up the WTO, acting as a forum of multilateral trade negotiations, seeks to resolve trade disputes. WTO is not a free trade institution. It permits tariffs and other forms of protection, but only in limited circumstances. So when you are going to discuss about the WTO and its functions, you should not actually say that WTO supports any, let's say, does not support the tariffs and any type of protection at all, okay, because it actually does. Now, if we're talking about the Uruguay round, which we mentioned a little bit a couple of slides before, this round ended with the agreement signed in Marrakesh, Morocco in 1994 and established WTO. Okay. The scope of multilateral trading system was broadened from trading goods to encompass trading services as well, and trade-related aspects to intellectual property rights. So basically, if we're talking about a GATT, GATT was covering only trade in goods, whereby WTO covers any trade in goods, trade in services, and any trade-related aspects of intellectual rights. Okay. The multilateral trade agreements under WTO system are treated as a single undertaking, which means that every member of the WTO is a party to every one of these agreements and must implement them accordingly, without actually having a choice to skip any of them. And normally, if a country actually skips or trying not to follow any of the rules, the other countries are able to implement sanctions. Okay. 65 countries in 1995 became automatically WTO members in January 1st, 1995. Remaining 97 countries went through the 6-step process to become WTO members. Here are, like, we have the 5 newest members: Seychelles, Kazakhstan, Yemen, Laos, and Tajikistan. There are 22 countries, observer countries, that are in process of joining the WTO. So the main principles of WTO are transparency, national treatment, free trade principle, dismantling any trade barriers, rule-based trading system. If we're talking about these principles in a broader way, basically WTO aims to promote free trade through gradual reduction of tariffs, provide legal framework for negotiation of trade disputes, trade without discrimination. WTO is not completely free trade body, it allows tariffs. WTO is committed to protect fair competition, and there are certain rules in terms of subsidies and dumping. WTO is committed to economic development. For example, in recent rounds, the developed countries were put under pressure to accelerate restrictions on imports from least developing countries. The structure of WTO: general countries, which basically works as a dispute settlement body and trade policy body. Ministerial conference, which means that all the states, member states of WTO can actually, or let's say, have a conference where they put forward any trade problems. General Council has 3 branches: Goods Council, Intellectual Property Council, and Services Council. Some of the successes of WTO: has over 160 members, 98% of the world trade goes through it. Over 20 countries are seeking to join WTO. An increased number of trade disputes have been brought through WTO, showing that it is actually an important forum that allows solutions to any trade disputes. WTO regulations and cooperation helped avoid a major trade war. This was significant during 2008-2009 global recession. We could compare this in 1930s, where trade wars broke out, causing a fall on global trade. So the trade tariff, or the tariffs on trade got reduced from 50% in 30s to 9% in 2000. Okay. Advantages and disadvantages of WTO. From advantages: low prices on consumers, free trade encourages greater competitiveness, because the firms have a higher incentive to cut costs. For example, domestic monopoly may now face competition from foreign firms. The law of comparative advantage states that free trade will enable an increase in economic welfare, economies of scale. By encouraging the free trade, firms can specialize and produce a higher quantity. This enables more economies of scale. This is important for industries with high fixed costs, such as car or airplane manufacture. On the other hand, there are some disadvantages. Many developed countries went through a period of tariff protection. This enabled them to protect new emerging domestic industries. Free trade may prevent developing economies develop their own infant industries. WTO is being overshadowed by new partnerships in trade, international partnerships in trade. We're going to discuss it in our next lesson. And difficulty of making progress. WTO trade deals have been quite difficult to form consensus, because there are many parties, and various rounds have taken many years and actually it was a very slow process. WTO trade deals still encompass a lot of protectionism in areas like agriculture, and lately we have actually witnessed the trade wars between US and China, which also created some unstable situation. WTO has rules which favor multinationals. For example, most favored nation principles means that countries should trade without discrimination. So that's pretty much it about the Bretton Woods system. Of course, in order to write your essays and speak about the economic and financial globalization, you need to know all 3 institutions which are based on neoliberal principles, and you need to know their functions. You'll also be given a homework which would include a practice of writing an essay, and that's pretty much it. Have a good day.